All right, let's go ahead and jump right into the trades today. I really kind of like to talk about quickly how the bias was formed. First, best trades of the session. I'm only going to do the AM session because it's Martin Luther King Day, so it's short, and we'll cover the three features of the day and three possibilities for the week of tomorrow. Big thing, and I know I'm going to go over a little bit over time here, but big thing that matters is when you're designing a process, you're doing so with logic and foundation in mind, which means, we can't pick a strategy out of the sky and say, oh, because I can define it and put words to it, and I think that I understand the concept of it, that therefore means that we can execute it and we'll have the success that we hope to. In some ways, that's why looking at charts after the fact is so easy. You can apply that logic after the fact, and the execution is clear. Why is it clear after the fact? Well, the easy reason is, and I'm going to try and see if I can get past the easy reason, but the easy reason is it's not moving. All the data is revealed. So the puzzle is completely revealed and put together. But the thing of it is that when your trading strategy is based in logic and based in a strategy and a vocabulary that you completely understand, you'll see it as no different than any kind of process that you take on. Any kind of thing that you do, whether you're building a birdhouse or whether you're swinging a bat, once you start to get out of the intuitive and you start to get into the logical, the steps become repetition. And so you will see that those repetitions are also become diagnostic tools as well. So for example, if I'm swinging the bat and I know that I've got a step, I've got to twist, and then I've got to break. We talk about that, breaking the wrist. Step, twist, break. Keep your eye on the ball. 3 basic steps. And as you begin to have fluidity with that process and that motion, what starts to happen is you get that body-mind connection where you go, oh, what happened? I missed it because I pulled my head. It means I took my eye off the ball. So I immediately am able to diagnose what happened. I'm not emotional about it. I just go, well, sometimes you will be, but I recognize, all I need to do is keep my eye on the ball. That's all I have to do. And if I miss it, the pitch might have been better than something I can hit, which then becomes another diagnostic for how we can improve our game overall. Trading is no different. It is absolutely no different. So let's dig in to the 3 best trades of the day. Let's dive in, the bias and all that. And I'll show you kind of how I got to this stuff. I'll just do this as the summary here, but the bias was basically long based on the New York opening session. I'll show you why. But the 3 best trades of the day were an 805 breaker long, 835 breaker long. There may not have been a fill on that trade. And then the 1053 fair value gap short. 3 best trades. 3 daytime features. Yesterday's high of day, meaning Friday, that was taken out. So that's, from a liquidity standpoint, is very interesting. You'll notice that it wasn't preserved for, say, tomorrow, when there'll be more volume. The hourly order blocks were filled in and balanced, which means that we've kind of created a balanced profile in terms of the market structure. And it's Martin Luther King holiday, so it's very light trading. You can even see that in the bodies of the candles. And then I'm going to talk about the 3 expectations for tomorrow. Now, what we're seeing tomorrow is a rejection, or what we're seeing today is a rejection of a low of day from Friday that we tagged. So we went up there and tested again, and we started drifting lower on low volume. So that could continue. It could stay lethargic until we hit a higher time frame buy location. Or we could see a small rejection lower, a little energetic rejection lower, and then trend higher through Friday's high and even yesterday's high. Or maybe we're already low enough based on the overnight session and would trend higher right from where we are. The overnight tonight will give us a lot of information to work from. So now let's, I want to dig in a little bit further and go through that with you here. There we go. So let's just dive a little deeper here, and we're going to focus on the workflows and the trades that the process revealed. Doesn't matter if I didn't actually trade, but I'm showing you the process anyways. And that's the objective, to demonstrate that process mapping. The whole point of this video series is really just to talk about process mapping. It's not about showing you trades. It's not about showing you how I trade. It's not about predicting how you can trade. It's about process, and that's the key here. So let's go ahead and dive right into that. So first things first here, we're just looking at the daily chart as it stands now. And I'm going to show you a little bit of markup that I did. So I have some levels built out. Those will all cascade to the other ones. You notice I talked about the high being taken out. You'll see these big wicks here. That's important, I think, from gauging, how high will we go to how low will we go? What's the range that we're going to be working in? That's important if you're thinking about whether or not you want to be a buyer or seller. Do you want to be buying high in the range, or do you want to be selling low in the range? No, probably not. So when we think about the proportionality of what the market can do, we actually need to map out, what constitutes a good buy. Too many times over my career, I have focused on just buying because I got a buy signal and never really thought about the proportionality of like this premium versus discount idea. So I apply that every single day. In fact, I rebuild my charts every single day. That's part of my process that I'm sharing with you. Every single day I rebuild my charts. Why do I do that? Because it keeps me contiguous with it. So I don't feel like I'm assuming anything. I just have sort of done the same homework every day. It's like my pilot's guide, my pilot's manual. I don't assume that I know exactly what that sensor means. I see the sensor and I go, hey, sensor says thing. Let's go check the flight manual and what I'm supposed to do when that sensor turns on. And then that way I'm not thinking about it. I'm not growing attached to the outcomes. I'm just watching it and letting it be what it is inside of my process. So then I go down to the 1 hour here. And first of all, the first things I'm thinking about is I like to trade the pre-market session, 8:30 to 9:30. And then I like to trade 9:30 to 10:30, roughly 11 maybe. And then I like to trade right around 1:30 to 3. And that's pretty much it. Other than that, I don't touch the market beyond that, unless I'm working on a new strategy or something like that, and I just want to increase the number of repetitions I have. So I can see 7 minutes here, 8 minutes. I'm going to apologize. I'm going to try and scoot through this so you get to the idea of it. But you can see that the market pushed up on Friday. Asia's session occurred, and then we ran down in the London session. Then part of the New York session was running higher, and then it's really tight range. So basically, what am I looking for? Well, I'm looking for support and resistance inside of the upper side of the Asia range, and I'm looking for support and resistance down in the bottom side of the London range. That's basically what I'm looking for. So I've got my premium and discount ideas laid out here. And how would I do that? Well, first thing that I do is I lay out, and I got this from somebody else, so don't think that I'm a smart guy. I'm not. This premium discount idea that ICT has. So what do I notice here? Look at this down bar. See right where it bounces off of? That's really fascinating. It also happens to be the 50% pullback of this entire range from a volume standpoint, body to body, body open to body close. So that is a very fascinating thing. When I see those things, my eye goes, that is probably bulls, right? It's not sellers stopping selling. It's probably bulls engaging, probably what that is. Could be a combination of things, but that helps me set my range. So now I'm going to tear that apart. I'm just going to say, okay, well, this has already happened by the time I get into the markets 4 a.m. So I'm going to do that again. I'm going to say, all right, well, let's chunk that down. Now where do we sit? Oh, look at that. Well, we don't get into premium until we're up above 40.12. So I kind of, in a general sense, I'm okay buying below 40.12 and selling above it in a general sense. So now my range is picked out. Now my job is to go, what does the market give me and when does it give it to me? So let's just pull out these trades as I pointed them out to you already. You've got the 805 buy. Why? Because where are we? We're below 40.12. We've held a low. We created some relative no highs, and part of my process is a pullback with gaps. So I see that gap, I take that right there. 4,009, and where am I running? I'm trying to run to this 1 hour location. Where is it? Up in premium. And look, it gets there. That's great. That's cool. Doesn't always happen, but it got there. And then you see this buy right here. This is the one, the 40.12 is right at equilibrium. So it's not premium, it's not discounts right there. But we get the same setup as I got down here. So do I take it? Yeah, of course I take it because it's a trade and it makes sense. And I think the market has already tipped its hand to me that it wants to go up to premium. So I'm going to buy it to get there. And then it'll do what it does when it gets up there. And then the last trade here is this one where we've gotten to premium and then we start to show a willingness to go lower. So then I'm looking to sell. And you guessed it, I'm looking for this fair value gap right here. Why? High, higher high, breaking structure, fair value gap, pull back, continue lower. Where am I expecting it to go? Well, most principally, I'm expecting it to take out this and that just because it looks too clean. Look at how close these lows are. That tells me that a market maker put some orders there and they're looking to recapitalize that and get back through it. And, through the benefit of the cooking show being over, it ended up being that way. That ended up being where the biggest and most energetic move actually happened on the entire day, apart from getting to it, is right there. So that's something I can predict in the future based on the sequence of events and stay in context with my plan. See how I've formulated a bias. I've put mile marker strips down where I've said all the way up to this point here, 40.12, and I'm just going to draw this on there kind of like that. All the way up to this level, I'm willing to buy. Why? Because I'm down in discount. But above this, I don't really want to buy anymore. I want to buy below that, and then above that, I might be looking to sell. And I don't sell just because it's up there. I don't sell just because it touches something. I'm not trying to pick out highs. I've done that for a really long time, and I've been extraordinarily successful picking highs and lows. But it's an ego trip because honestly, you never know when it's really going to happen. So how many stops do you want to take trying to prove that you're right about something? Now, I've taken too many. So I don't think that's a good idea. And it's no longer part of my process. So those are the trades. And based on tomorrow's action, that's exactly what I would expect to see happen. Like I said, we're going to continue to drift lower. I'm going to take all these drawings off of here so we can get into that. Either we're going to continue to drift lower. Remember, we got into, right into equilibrium here. But if this becomes a failure swing by taking out this low pivot or even coming down to it, then chances are we're going to drift down into this area before we go higher. Now, I don't know if it's going to happen, but it could happen that way. Or we could just test down a little bit, see this gap here, and then we'll run higher. So that's how I get to both of the scenarios. And if this is already too aggressive for everybody, because we've got a gap and then another gap, it may trend higher. So that's how I got to those conclusions. Here's what's neat about saying things like that. And I'm just going to try and wrap up here with this. And then I've got one offer I want to make to you. If those things don't happen, because they're my process, if they don't happen, it also is a diagnostic on what I should do. If I've laid out 3 scenarios and neither one of them have happened, as a developing trader, there's one of 2 possibilities that's going on. Either my scenario was too ambiguous for me to know that it is actually happening, but I think it's not happening. That's common. Or what I think is happening is not actually happening, and my job is to do nothing. If you're a batter and you see a pitch coming at you and you have no idea what it's about to do, should you swing at it? No. Okay. If you're flying a plane and a idiot light comes on that tells you something's wrong, should you guess at what it means? No. Why is it in trading that we're so willing to do that? Is it because we think that there is no risk to us if we make that guess? I think you've seen probably in your own trading that there is a giant risk to you. So don't take that risk. Okay, so let me just make one more offer to you that you may find interesting. It's free. It doesn't cost you anything. Come to my website, go to Trade Process Management, read this here, and I've got 2 templates I want to offer you. You can use either. If you're a very strict price action person, you may appreciate this template that allows you to study price action in a very contextual way. Allow me to describe what it is. First of all, it's just a screenshot of your view of the day, whether you do that on the 1 minute or the 5 minute or the 30 or the 60, or the, whatever, however you view it in context, your context view, the one that helps you decide what your bias is. Screenshot that and then start marking that up every single day using this template. And what you'll see is that you'll begin to see the macro patterns that make up the micro executions. You'll begin to see that. The beautiful thing is that a lot of us, including me, have spent an enormous amount of time putting together a narrative, having no concept of the idea of whether or not a narrative is actually going to help us recall the workflow that we need to actually engage in. Odds are it won't. It just becomes a nice story. And this is one of the problems that, and I won't get on my soapbox, but I'll just say this is a problem for most people. So most of us are visual learners. We need to see what it is that we're talking about, especially when it's a conceptual thing that we're describing. So this template is meant to help you with that. Now, if you want to go a bit further and you want to say, well, I want to do more than just marking up my daily chart. I also want to I want to mark up my entire process. I'm going to invite you to take the Trader Challenge and download this journal. And it describes how to build your entire process out. Now, it's just a journal. So I'm going to give you the instructions on how to use it. This is exactly how I do mine. So I've given you some template examples here. But I think you'll appreciate that all of the framework for building your data model and your workflow is contained in this journal. So I'm offering this for free, simply just an email sign up, trying to help the community and, build this community around folks that really care about trade process management. So I'm looking forward to hearing from you. If you found this valuable, could you let me know? And if you use these journals, post them. Let's find each other in Discord and post your journals. I would love to see this stuff. I know how big of a difference it's made for me in my personal trading, my personal development as a human being, my professional development both as a trader and as somebody who works in corporate America. So let me know how this is helping you. All right. Take care of yourself and good trading.